Good evening and a warm welcome to our fourth quarter and full year fiscal 18 earnings call. I'm Nimish from the SUNPHARMA Investor Relations team. We hope you received the Q4 financials and the press release that was sent out earlier in the day. These are also available on our website. Let me introduce the management team. We have with us Mr. Dilip Sanghvi, Managing Director, Mr. Sudhir Walia, Whole-Time Director, Mr. Kal Sundaram, Whole-Time Director and CEO of India Emerging Markets and Consumer Healthcare, and Mr. Abhay Gandhi, CEO of North America. Today, the team will discuss performance highlights, update on strategies, and respond to any questions that you may have. As is usual, for ease of discussion, we will look at the consolidated financials. Just as a reminder, this call is being recorded and a replay will be available for the next few days. The call transcript will also be put up on the website shortly. The discussion today might include certain forward-looking statements, and this should be viewed in conjunction with the risks that our business faces. You are requested to ask 2 questions in the initial round. If you have more questions, you are requested to rejoin the queue. I also request all of you to kindly send in your questions that may remain unanswered today. I will now hand over the call to Mr. Sanghvi.
Welcome and thank you for joining us for this earnings call after the announcement of financial results for the fourth quarter and full year of FY18. Let me discuss some of the key highlights. Our overall sales for the quarter were at 6,711 crore, a degrowth of 2% over the same quarter last year. The decline is primarily driven by the US and API businesses. All our other businesses have grown for the quarter. In line with our EBITDA margin guidance, our overall performance in Q4 reflects a gradual improvement in EBITDA margin over the first half of the year. This is despite a challenging US generic pricing environment and continued investments in building our global specialty business. Our full year revenues have declined by 14% year on year. However, on constant currency basis and adjusted for GST impact, there is only a marginal miss in our original guidance. I am happy to share that we have recently received approval for Yonsa in the US, which can be an interesting product. This is a step towards building our specialty business in oncology. Our US generic market outlook, we expect the market to remain competitive. Given the changed business dynamics, many of our R&D projects have become unviable and we are rationalizing generic R&D spend. We have announced a dividend of 200%, which represents a payout ratio of 27%. This is lower than last year, but all of you will appreciate that we are investing for future and hence need to conserve cash. I will now hand over the call to Mr. Walia for discussion of the Q4 performance.
Thank you, Mr. Sanghvi. Good evening, everyone, and welcome to all of you. Our Q4 financials are already with you. As usual, we will look at key consolidated financials. Q4 sales are at 6,711 crore, down by 2% over Q4 last year. Material cost as a percentage of the sales was 26.4%, lower than Q4 last year, mainly due to better product mix as well as our lower COGS for Taro. Staff cost was at 20% of sales, higher than Q4 last year. This increase is mainly due to expansion of the specialty team in US. Our other expenditure is at 32.5% of the sales, higher than Q4 last year due to an higher R&D cost and increase in investment in building the specialty business. As a result of above, the EBITDA for Q4 was at 1,417 crore with EBITDA margin at 21.1%. Net profit for the quarter was at 1,309 crore, up by 7% over Q4 last year. EPS for the quarter was rupees 5.5. Excluding the one-time tax benefit, the adjusted net profit for the quarter was 1,050 crore. Now we will discuss the full year performance. Net sales were at 26,066 crore, a decline of 14% over last year. Material cost as a percentage of the net sale was 28.5%, which was higher compared to the last year. The staff cost for the full year was at 20.6% of net sales, while other expenses were at 31%, both higher than last year. This increase were driven by loss of innovative exclusivity in U.S., lower profitability for Taro, and challenging U.S. generic pricing environment. As a result of the above, the EBITDA for the full year is 5,185 crore with EBITDA margin at 20%. The net profit for the full year is 2,162 crore. There are three large one-time items which has impacted the net profit number. One of them is rupees 259 crore one-time tax benefit reported in Q4. Second is 513 crore of one-time deferred tax adjustment related to the change in U.S. tax rates reported in Q3. And the third is 951 crore settlement impact related to modafinil antitrust litigations announced in Q1 this year. Excluding all this one-time impact, the adjusted net profit for the full year is 3,367 crore with a net profit margin of 13% compared to the net profit of 6,964 crore for the full year last year. The net profit for the last year included the benefit of 180 days exclusivity of imatinib in U.S., which expired in July 2016. Let us now briefly discuss Taro performance. Taro posted Q4 financial year 18 sales of $175 million, down 11% over Q4 last year. For the full year, the sales were $662 million, down 25% over last year. Taro net profit Q4 was $86 million, up by 4% over last year. Net profit for the full year is $211 million, down by 54% year to year. I will now hand over to Kal Sundaram, who will share performance of our Indian and emerging market business.
Thank you, Mr. Walia. First, let me take you through the performance of our India business. For Q4, sales of branded formulations in India were 1,963 crores, a growth of approximately 2% over Q4 last year, and accounting for approximately 29% of sales. Growth for the full year was at 4%. As indicated in our previous call, this was a transition year for the industry with the introduction of GST in India, and hence the growth comparison to the previous periods will not be appropriate. Post the GST adjustment, the full year growth was approximately 9%. Our efforts to improve productivity is paying dividends, with wage inflation for the field force more than offset by incremental sales. Our core therapeutic area segment continued to show strong growth and thus enable us to maintain leadership in these therapeutic areas. SUNPHARMA is the largest pharmaceutical company in India and approximately hold 8.5% market share in over 1,19,000 crore pharmaceutical market as per March 2018 AOECD AVAX report. As per latest SMSRC report, SUNPHARMA is also ranked 1 based on the share of prescriptions with 13 classes of doctors. For Q4, 15 new products were launched in the Indian market. Now let me focus on performance in emerging markets. Our sales in emerging markets were at $199 million for Q4 with a growth of 10%. Emerging markets accounted for 19% of our total sales. The growth is broad-based amongst emerging markets. Key markets contributed to the growth were Romania, Eastern Europe, Middle East, North Africa, and some Asian markets. Now I'll hand over the call to Abhay. Abhay?
Thank you, Mr. Kal. I will briefly discuss the performance highlights for the U.S. For Q4, our overall sales in the U.S. were down 3.3% at $368 million, accounting for approximately the main reasons for the year-on-year decline in our U.S. revenues include price pressure.
Mr. Gandhi, sorry to interrupt you, but your voice is breaking up. If you can check that, please.
Am I audible completely now?
Yeah, this is better, sir. Thank you.
Okay. So I'll go back a sentence if I have broken up earlier. The main reasons for the year-on-year decline in our U.S. revenues include pricing pressure due to customer consolidation, lower generic imatinib, and authorized generic sales. On Adxorica, as you know, we have made certain changes in the copay program because of which prescriptions have gone down. However, we expect sales and profits on the product to improve going forward. A recent development was the announcement of measures by the U.S. government to lower drug prices for consumers in the U.S. We are currently studying the proposals and will be able to comment on it going ahead. Let me now update you on developments in the specialty business. During the quarter, we announced the U.S. FDA approval of our BLA for Ilumya. We have commenced launch preparations, and we hope to be launching this product in Q2 FY19. This marks a significant step forward for our specialty dermatology portfolio. Another recent development was the U.S. FDA approval for Yonsa, a product for treating metastatic castration-resistant prostate cancer in combination with methylprednisolone. We have initiated launch preparations and will be commercializing the product in the current quarter. We are pleased to add Yonsa to our growing specialty oncology portfolio. As all of you are aware, the U.S. FDA accepted our NDA for OTX-101 in December 17. We expect to commercialize this product in FY19. We will be incurring significant costs for commercializing these specialty products. I will now hand over the call to Mr. Shanghvi.
Thank you, Abhay. I will briefly discuss the performance highlights of our other businesses as well as give you an update on our R&D and specialty initiatives. Formulation sales in rest of world markets, excluding the U.S. and emerging markets, were $116 million in Q4, a growth of 5.7% over last year. ROW markets accounted for approximately 11% of Q4 revenues. We continue to focus on developing and utilizing APIs for captive consumption for benefits of vertical integration. For Q4, the external sales of our API business were at 332 crore, down by 16% over Q4 last year. We continue to invest in R&D for enhancing our pipeline. Consolidated R&D investments for Q4 was 743 crore, accounting for 11% of sales. This R&D spending enables development of future product pipelines, including specialty and differentiated products. Our current generic pipeline for the U.S. market includes 139 ANDAs and 3 NDAs awaiting approval for the from the US FDA. And finally, for the FY19 guidance, we expect a low double-digit growth in our consolidated top line. This is despite our assumption that the US generic market will continue to be competitive. R&D expenses will increase due to clinical trial expenses for new instruments for ILUMYA and the other specialty product development. Overall, R&D investments likely to be in the range of 8 to 9% of FY19 sales, with higher proportion being spent on specialty R&D. FY19 will mark crossing of some important milestones in our specialty journey. As indicated by Abhay, we plan to commercialize ILUMYA, YONSA, and OTX-101 in the US market in FY19, and hence we'll have to incur significant expenses for these important launches. With this, I would like to leave the floor open for questions. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Neha Manpuria from JP Morgan. Please go ahead.
Thank you for taking my question, sir. I have two questions. First, on the U.S. sales, there has been a sharp increase quarter on quarter despite the, sales of Absorica coming off. I understand part of that would be Taro. But is there any other reason for the improvement in the U.S. sales in the quarter?
Abhay?
Yeah. So on specific products, we are seeing an improvement. And as you rightly also said, that Taro is also responsible for the increase over quarter on quarter. But, on specific products, we have seen some improvement and gains in share.
So, sir, if I understand this correctly, as Absorica comes back, this base should only improve in the next quarter, excluding what happens to Taro.
Yeah, right.
Mr. Abhay Gandhi?
Am I audible?
Yes, you're audible now, sir.
Yeah. So I would say that Absorica is not the biggest product when you look at the overall context of the business. But yes, we hope to see improvement in Absorica, and if that is that's how we would like to look at. And I think improvement in business is what we are aiming for anyway.
Fair enough. And sir, second on the specialty strategy, now that we have, two launches planned for this year, particularly when it comes to ILUMYA, what's our launch strategy there, given we have, fairly large products already in the market? How do we go about, is there a, target market share that we've looked at or peak sales that you would like to give any color on?
No, I don't think I would like to go into strategy and the kind of share we are looking at. We feel confident that even in this market, we can get our fair share. And I think as a team, whatever we need to do and the strategies we need to have, we are working on that and hopefully do well in this market.
Fair enough. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Chirag Takli from HDFC Asset Management. Please go ahead.
Yes, sir. Thank you for the opportunity. First one is on Odomzo. Is the scale-up in line with your expectations, Mr. Sangvi, up until now?
I think asking this question to me and Abhay, I think you'll get different answer. But Abhay, better you answer.
So I'll give my answer.
Yeah.
So Novartis, when they were marketing this product, had a 3% kind of a share. I think in a relatively short time, the peak that we touched was 10%. We hope to do better as we, while Mr. Sanghi says we are never ever completely happy, but I think you should stay with my answer on this one. Thank you.
And there is significant potential to, grow from the 10% level as well.
Yeah, and that's where we are going into Mr. Sanghi's answer. So.
Fair point, sir. And sir, when you say that there are significant investments to be made in FY19 as well, the hurt on profitability on an absolute dollar million basis, will it be significantly higher in FY19 versus FY18, sir?
It will be, because it's now the phase when we are actually going to market. So a lot of expenses that field force, which weren't completely captured in last year, will now take complete effect this year, and also your in-market expenses. So,
but you'd also have sales, right, sir?
Yeah, but the question is that will we have expenses?
Right. Okay. Fair point. And just one third one, if a quick clarification. In your opening comments, Mr. Sanghi, you mentioned that, some of your generic products in the pipeline are becoming unviable. In the past, you've talked about a 5-year payback, 20% kind of, return. Some of your products are not even meeting that kind of benchmark. Is that what you're alluding to?
Yeah, that's what I was alluding to. So if it doesn't meet that benchmark, then we will seriously relook at whether we want to continue that product or not.
And historically, you focused only on the, complex, limited competition, niche kind of products. So fair to say that doesn't change, right, in terms of product selection?
Sure. I mean, whichever product we think we will make money long term will continue to be focused.
Fair point, sir. Thank you so much and best of luck.
Thank you.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead. Anubhav Agarwal from Credit Suisse, your line is unmuted. Please go ahead with your question.
Hello.
Yes, you're audible. Thank you.
Okay. Good evening to all. One clarity on Absorica from the last conference call. Abhay, you made a comment that with the change in program now, the profitability of the product will be higher. I just wanted to understand, what do you mean by that? Are you trying to say that total absolute profitability of the product will be higher, or per unit profitability will be higher? Can you clarify that?
Both.
Can you help
per
us
unit and total? We will do better.
How does it happen? Because your volumes have become half. Unless with the co-pay, your EBITDA per unit has become less than half when you introduce a co-pay and you were getting a lower ASP on the product. How would your absolute profitability be higher here?
Yeah, we have co-pay, which was actually not profitable at all, and we were losing money on quite a few scripts.
Abhay, I think you're breaking up. So I think maybe I will give the answer from here. It's easier. So I think, or maybe you can reconnect. But so I think the way Abhay is trying to explain is that our previous co-pay and also coupon program meant a relatively low value capture and realization. With post these changes, our overall realization will improve. But that will also lead to reduction in the total prescription. So the question that you're asking is whether the reduction in the value realization is higher than the offset that we may receive as a result of reduced prescription? And answer is yes.
So I'm just trying to understand you. This program you ran for almost more than 6 months, right? So what took company to realize that we are losing money by introducing this higher copay over a 6 to 7 months period?
Abhay, you're still on the call? Or?
Sir, we are getting him reconnected.
Okay.
Should we move to the next question, sir, in the meanwhile?
Yeah, please.
Okay. Dilip, I have one question on Hello Facility.
Yeah, I think too many questions. There are many other people.
Sir, I just asked one question on Absorica. Anyways, I can rejoin. Thank you.
Thank you.
Thanks.
The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah. So just one clarification first, sir, about the Novartis, the branded generic product what we had acquired in Japan. So whether the rights market we currently just distributing, whether the product has been transferred to our name fully as of now?
Yeah. I think we also gave a press release to that effect. So now these products are being marketed in Japan with Sun label.
Okay. And, okay, fine. And second, sir, on the specialty side, so may I know what is the kind of spend that we have made through current financial year, FY18, throughout FY18? And on the R&D spend, particularly, how much that we would have allocated towards that?
So both of this, I think we don't give business by business spend and cost. So I'm not able to.
Okay, then my question would be, sir, on the margin front. So basically, on the R&D side, we are talking about relatively higher R&D spend, considering our specialty initiatives, as well as the kind of generic business focus, whatever that has been continuing. So, and the challenge is anyway we are maintaining that, okay, that will be continuing. So, the margin expansion, what all would be the margin levers for us for the current financial years?
Multiple levers, I think. Control on costs that we can control. What you call rationalizing R&D investment for products that we believe are profitable long term. Also, I think selling more of high margin products.
Okay, so that means whether the rationalization of the products will continue for some time, sir, in US particularly?
It will. But Abhay may be better able to answer, so if he's joined.
I think it's a continuous process. We keep looking at products we can continue to sell high margin products, more of it if we can, and every quarter look at which products are completely unviable that we should not be marketing. So it's like a moving target, and it's something we keep looking at continuously.
Okay. So whether it is even the focus is for the base business products, along with the pipeline.
I think you, I didn't get the question. I think you're on your 10th question, but what was the question anyway?
So it is whether it is like even for the rationalization focus will remain even for the base business portfolio.
So what's the base business portfolio? I didn't understand that part of the question.
Okay, so we are talking about
everything that we were selling last year is base business. That's the way I understand. And on those products, we keep evaluating which one makes sense today and going ahead. So I hope that answers your question.
Yeah. Okay. Fine.
Yeah.
Thank you, sir.
Okay. Thank you.
Thank you. The next question is from the line of Anmol Ganju from JM Financial. Please go ahead. Anmol Ganju, your line is unmuted. You may go ahead with your question, please. As there's no response from the line of current participant, we move to the next question. That's from the line of Nimish Mehta from Research Delta Advisors. Please go ahead.
Yeah, thanks for taking a question. Sir, first on the guidance that you mentioned about low double-digit growth in sales, are we also, basically assuming Halol clearance somewhere, when basically is the question, and is that being baked into the guidance?
Yeah, of course. If all the businesses, including Halol, including Illumia, also, let's say, OTX-101, for whatever period that we will sell in US. All of that's, I think, factored in the guidance.
I see. Okay. And the second is on Yonsa that we just launched. Can you just explain what is the basic difference between Yonsa and Zytiga now that Zytiga is going to be off patent very soon? So what is the unmet need, or what is the differentiated part that we are looking at Yonsa?
Actually, that will be a long answer to give to you. So maybe if you can take it offline, we'll be able to explain it to you better. But it's a valid question. I think we'll give you the answer offline and explain to you.
But I think it's an important product, Abhay, and we believe that it can be an interesting product for us in the short term, but also in the long term.
Yeah, sure. And a slight correction. We haven't launched it as yet, but we hope to in this quarter.
Yeah, sure. No, I just looked at the labels of the two and I couldn't see much of the difference, and which is why this question. But yeah, I will take it offline. Thank you. Yeah. I'm done with my questions.
Thank you, Mr. Mehta. The next question is from the line of Shri Hari from PCS Securities. Please go ahead.
Yeah, thanks for the opportunity. Two questions basically. The low double-digit top-line growth that you guided for, would it be right to presume that a major chunk of the growth would come from the three assets, specialty assets that you plan to commercialize in this fiscal? And secondly, was there a head-to-head between Yonsa and Zytiga? If so, what were the results? Thank you.
So I think the growth reflects our plan to grow in each of our business. So India, emerging markets, our consumer product business, US, Europe. So all of that's included, including specialty products. Abhay, I'm not very sure, but I think there was a comparative study between Zytiga and Yonsa, based on which the product approval was received, correct?
Right, sir, but I'm a little wary of what not to say on this call because there are patent issues. There is a label which finally came, which I haven't completely studied. And that's the reason why I said that once we study, maybe we can answer some of these questions offline. So I'm a little wary of what I can and cannot say on the call.
So I agree, and I think that's the right way to. But we cannot, it's part of the label, that comparative clinical trial.
Yeah.
It's part of
so
the label.
I need to study finally, and once we do all of that, I think to whoever has a specific question on the product and how we can differentiate with the competitor product, I think we'll be able to give an answer. Just request the patience for a couple of days till all the legal matters and patent matters are clear to us and how we can address it.
Yes, just to crystallize the double-digit growth guidance that you have given, will the share of the three specialty products be significant, or how do we classify that? Illumia, OTX, and Yonsa, their share, would it be significant in the growth guidance that you have given?
If I'm looking at it as an overall company, Dilip, I do not know how much is the factoring you have kept, but if the larger part of the business, I mean, if you look at it from an overall company perspective, I would say it will be like...
I agree. I mean, I think that the way we look at business is very different from the way in which analysts look at business. I think for us, it's a new engine of growth. While we will continue to grow all our existing businesses, we want to find a new engine of growth, and that is why we are investing on this at this point of time, so that in future it can become as meaningful as some of our larger businesses. But there is a significant cost associated with that, and also it's a gradual process.
Okay, fine. Thank you.
Thank you.
Thank you. The next question is from the line of Ronak Lodha from BNP Paribas. Please go ahead.
Good evening. Thank you for the opportunity. And just one simple question. Where do we stand on the Halol plant clearance? And if you can give some insight on that.
So I think, as we've explained, that we continue to update FDA about the progress with our remediation activities, and then we await their response. That's where it is right now.
Okay, thanks.
Thank you.
Thank you. The next question is from the line of Vikas Maheshwari from Maheshwari Financials. Please go ahead.
Yeah, thank you, sir, for giving the opportunity. My first and the last question is, what are the preventive measures taken to solve the problem of Halol? As we have seen since 2014, the problem has been regular, and in re-inspections also the company has been unable to resolve the problem, and because of that the investors are losing money. And one more thing that I would like to say, that even we know that the Halol gives 15% of the revenue, and as the US pricing pressure is there, we can save revenue guidance from here. Then why the management is not taking serious steps?
No, I think, but you want to say something?
No, I think the question was more on Halol, so.
I agree with some of your unhappiness. As a large investor, I am also unhappy. So, and we are trying to find a way to get the plant recertified at the earliest. It's taking much longer than what we would have liked it to. But what I think is important for all the analysts or investors also to keep in mind is that last year 18 of our sites were audited, or we have faced 18 US FDA audit, and we came out of each of those inspections with either no 483 or a very limited 483. Halol clearly has taken much longer than what we would have liked it to, but that's a reality that we have to find a way to fix.
Mr. Maheshwari, before I unmute your line, I would request to please use the handset mode and not the speaker, please, because it's creating an echo on the call. I'm unmuting your line.
Yeah, sure.
Are your questions answered, sir? Mr. Maheshwari?
No.
We seem to have lost the line for Mr. Maheshwari. We move to the next question. That's from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yes, sir, just in continuation, one question on the Halol facility. As per the corrective action plan that you would have given FDA after the observation of the 483 form in February, when do you expect a last response from your side to the FDA? You just mentioned you continue to update FDA. Just the clarity will be helpful. Their last response promise is 2 months down the line. It's just around the corner. Just some clarity will be helpful.
So my understanding is that the last remediation action that is part of the response is second quarter.
I'm sorry, I missed that. When is that?
Second quarter of this year is the last date for the remediation response. Okay.
So would that imply that, at best, you would have baked in for, let's say, 1 or 2 quarters, right, in the guidance?
Yeah, that's what is our, your understanding is correct.
And just one more clarification, in this sales, in the U.S. sales this quarter, ex-Taro I'm talking about, would you say, is there any one-off? By one-off, I'm taking that core XCR exclusivity I'm not taking as a one-off. We know that it is a one-off in this quarter, but other than, is there any very high stocking of any product which is leading to very high sales in the U.S. in this quarter?
No, there is no one-off.
Okay, thank you very much.
Thank you. The next question is from the line of Vikash Manchanda from Nirmal Bang. Please go ahead.
Thanks for taking my question. Just one on the psoriasis market. Could you share some color on if there is a change in either the reimbursement dynamics or pricing of products in the psoriasis market in the U.S.?
So what exactly are you trying to get at? Pricing changes by whom?
So what we have heard is...
WAC?
So what I've heard is some companies... am I audible?
You are.
Yeah. What I've heard is some companies are have started cutting prices in the U.S. to kind of entrench the first line, so kind of get into the first line patients. And other thing I'm hearing is there are legislations being passed on against insurance companies to cut down on step edits. So has that translated into easier reimbursement norms and also if pricing reduction has become a norm in psoriasis?
So to the first part of the question, if I look at price of a product as the WAC, then I have not seen any changes in the WAC of any of the products in psoriasis. However, to be able to hold on to or improve their positions in the formulary, if there is extra rebating or discounting that any competitor is doing, I would not be able to see that through any publicly available information. On the second part of the question that you asked about insurance companies and actions being taken to remove step edits, again, I haven't seen that. I think as far as overall the government policy is concerned, we are still studying, but it's not as crystal clear as what you said.
Okay. And just one more. Are there guidelines that are being promoted to treat psoriasis that would demand more aggressive treatment and hence more aggressive use of biologics?
I think IL-23 as a class, I think we will continue to gain share, all products in. So I do not know the aggressive treatment part of it, but every patient would like to have, would like to be clear of psoriasis and sustainably at that. So, and doctors are accepting the use of IL-23 as part of the treatment modality. I think that class will continue to grow. And when we also start promoting the product, that will help both our product as well as the class hopefully to grow.
Okay. Yeah. Thank you.
Thanks.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. So first question on Halol. Just trying to understand, would it be fair to say that, the sales which was impacted in the past, that has started to improve from that side itself, given the fact that all the remediation and the lines we were working on to improve the process and system is completed? So quarter on quarter, we would be seeing a sales improvement. Is that fair to understand?
You mean to say additional products coming out of Halol going to market.
Additional or the volume increase which would have been impacted in the past because of, few lines getting some remediation being done. So would the volume improve from Halol in the last 2 quarters?
It will.
So I'm asking in the past, it has improved, sir, in the last 1 quarter, 1-2 quarters?
Yeah, it would have. Abhay, you have any view?
Specifically, I think on sumatriptan injection, we have seen an improvement in the sales.
Okay, so injectable lines also which were impacted now is coming full stream.
No, I think you have to
I don't want to qualify.
When we come back, if the have a long-term agreement, then even if we are available, doesn't mean we'll get business. So it's a process. It takes time.
Yeah. So, and you are saying it will obviously improve, but I was trying to understand in the last 2 quarters, it has started to improve or not is what I was trying to understand.
Yeah, it has started to improve.
Okay, perfect. Thanks. And sir, secondly, on the India business, I missed the opening remarks. Sorry about that. But full year 4%, this quarter 2%. I understand there is an excise, this GST impact. How would the growth be? And anything we are doing to, even if we add back, it would be single digit. And SUNPHARMA being the leader, at least that industry, you expect how you expect the industry growth for fiscal 19 and yourself, sir, on the India business?
The 9% growth that I referred to is on ongoing portfolio. Number of the products which were not profitable in the past, we have discontinued. So I'll say if you sort of take those aside, the sales growth will be in excess of 10%. Going into this financial year, there won't be any disruption like what we saw for GST. Therefore, if you ask me, my personal belief is we should grow at a rate faster than we did last year.
And the objective is always to grow faster than the market.
Okay, understood. And lastly, on Gromeza, so is there any update on the product, sir?
So the product has just been received in the U.S., trying to take it into the warehouse after all the QA, SC clearances, and we'll start going after the orders and business from a week or 2 from now.
Okay, from supply side, we have done everything. We have full supplies now, is what I'm saying.
We have enough supplies.
Okay, perfect, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Alok Dalal from CLSA. Please go ahead.
Yes, hi. Good evening. Question is on the consumer health market in India. Dilip bhai, secondary market data is showing flat to declining sales for Volini and Revital for FY18. Does that tally with your primary numbers as well?
So, Cal, maybe you would like to respond.
Some amount of what you say, sales discipline we have brought into the consumer business, that in turn has affected the primary sales. And we are putting enough efforts on promoting the product more through promotion to the consumers. And what you say, the business model will be more patient or customer pull than being over-reliant on trade channel push. So what you're seeing is hopefully was a temporary phase.
Also, I think if you see recent months, there has been an increase in the pickup. Or if you look at monthly data, then there is a pickup, reinforcing what you're saying, that whatever that you're working for seems to be working.
Okay. So, Dilip, is it lack of advertising effort that has led to this? The decline that we've seen, because these brands had a very strong connect and meeting some of the let's say, mom-and-pop pharmacy, they are saying that substitution is happening.
Okay, if you are looking at Volini, the number of generics as well as sort of competitive brands that have entered the market, on the back of the success of particularly the Volini spray, there are probably, a dozen brands today available. So in such a scenario, number of these sort of competitive business model is more share-driven. So some amount of sort of loss of share is to be expected. But what we are doing is, number one, we are also renovating the portfolio, bringing more differentiated, innovative products to stay ahead. And on the back of it, support the product with strong consumer promotion.
Okay. And Dilip, second question was on the Ranbaxy acquisition. So it's been 3 years now, and hopefully the $300 million synergy would have got realized. So if you reflect on that acquisition over the last 3 years, what are the things that worked for you? What are the things that did not work for you? And how do you think Ranbaxy will contribute over the next 2 to 3 years?
I think it's not an answer which is possible to be given on a conference call with kind of limited time, because when you do something as large as acquiring a business with 15,000 people, I think it's a very, very complex answer. But overall, I think we believe that it will make the company stronger going forward. And we've learned a lot from this acquisition. Some of the things have worked. Some of the things have not worked. But
those things that... sorry, go ahead, please.
No, I think what happens is that we've limited time. So
yeah. Okay. All right. No problem. Thank you for taking my questions.
Thank you.
Thank you. The next question is from the line of Shrejin Sana from Future Generali. Please go ahead.
Yeah, hello. Thank you sir, for taking my question. So just wanted to check if there is any plan to do any buyback or promote increasing their stake in the company given the depressed valuation.
I didn't hear the second part of the question.
I mean, either promoter increasing their stake in the company or the company doing a buyback. Any plans for this?
I mean, if it is something that we haven't discussed this in today's board meeting.
Okay, but I mean, given that the valuations are depressed, would you like to do this in the...
I mean, it's a worth looking at options.
Okay. Thanks a lot, sir. This was the only question that I had.
Thanks. Thank you.
Thank you. The next question is from the line of Kartik Mehta from Deutsche Bank. Please go ahead.
Yeah, in the case of Illumya for the additional lead, could you indicate a number that we would spend for the earlier one when we acquired from Merck, or we had indicated some number for the R&D. So for this one, is there a number you could share for R&D?
So we don't have a specific number that we can share. Currently, Illumya is being... We have a phase 2 ongoing study for ankylosing spondylitis and psoriatic arthritis. So top-line result for that should be available in a few months. Post which then we will start phase 3 studies, and both of these will be independent of the previous guidance that we would have given for the total investment required for Illumya.
So is it fair to assume that the phase 3 cost, if at all, would come somewhere in mid-FY20 or somewhere end of FY20 for this?
So, I mean, since I don't have the numbers in front of me and we are working with the CROs, with a view to find a way to do the study faster. Because it's always a trade-off. Faster study will mean higher cost per patient. Because we have more centers. So we'll find an optimum cost and speed balance. But difficult because I don't have the numbers with me.
Okay.
And then we are also looking at whether we want to, we plan to do at least some study in gastroenterology indication this year.
Okay. Thank you.
Thank you. The next question is from the line of Ashish Thakur from Motilal Oswal Asset Management. Please go ahead.
Yeah, thanks for the question. Abhay sir, the one question for you, what would be your assessment of the US generic market, given that, most of the companies are now talking about product rationalization. So we have seen that coming from Teva as well. So how do you read the pricing scenario in the US market going ahead?
I think nothing will change much. I think we still expect the competitive pressure to be high. However, having said that, if there are products where somebody goes out of market and we are able to supply, there could be an upside. So there are a lot of moving pieces. So to give a very, very clear answer of where we are likely to go is always difficult, but I think the direction is not going to change for the better in the near term. That is the clear sense that I have.
Okay. This is helpful. My second question is on de-risking the injectable business. Now, since Halol is under remediation, yet to get a clearance. So we have a facility in the pharma license we have. So any plans to de-risk the injectable portfolio?
So there are limited number of injectable products which can be done at Pharmalucents. I think all the forms and formulations which Halol can do, or Pharmalucents cannot. It's also a much smaller facility. Having said that, whichever product we are able to do at Pharmalucents, as part of the normal network strategy, we keep looking at, and I think a couple of products we will move also.
Or is that incrementally we are doing everything for Pharmalucents?
Sorry, I did not understand.
Is it
incrementally we are doing what?
Incremental, whatever injectable work that we are doing, it is from Pharmalucents?
I don't think I would like to go into network strategy of which product we are doing from which site.
Okay, fair enough. That's it from my side. Thanks.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, one question on specialty business. In FY19, will the loss on specialty business increase versus FY18? That's one part. Second part is, you mentioned Dilip earlier that we can perhaps break even on specialty in fiscal 20. Would you still maintain that guidance?
So, Abhay, would you like to answer?
So I'll give part of the answer. I think one part I will leave it to you. But clearly, I would not say the loss will widen. That's not how we are looking at it. Our investment will be higher than what we invested last year. That is clearly so. But there will be some revenue also. So I haven't really looked at it that way, whether the loss is higher as compared to last year. Investments clearly will be. And there is also the R&D piece which Dilip has alluded to, where we will increase our investment for some of the existing to-be launched products.
Yeah. No, I think, Abhay, you answered part of my question. It all depends on how you look at the business. If you're spending, let's say, $200 million on clinical development of a product, which is not, let's say, generating any revenue till it comes to market, whether you would like to charge that to the existing business, or you only look at the existing business for its own cost of operation as well as this. On a standalone basis, the existing business will break even in 20. But we have ambitions about this business and we'll continue to invest. So that investment can be either in form of buying a business, or it can be in form of investing for a clinical study. So that is a separate cost center. So we should not link up both of this.
Sure. Just to clarify, what you mean is that if we don't buy any more molecule or if we don't invest in any more R&D on any future molecule, we should break even on the assets that we have in next year.
Yeah, that's a fair statement.
Okay. Thank you very much.
Thank you. The next question is from the line of Nimish Mehta from Research Delta Advisors. Please go ahead.
Yeah, thanks again for taking my question. Sir, on Halol, just wanted your clarification. I mean, are we now almost sure that it will not require re-inspection? Is that a fair assumption, I mean, at the minimum, or you think that it's still uncertain?
I mean, based on whatever that we understand, that's what we are operating, and that's what we've shared with you.
I'm sorry, but I couldn't get. We will not require it, the re-inspection.
Yeah. That's what is our current understanding.
Okay, fine. And second, actually, on the IL-23, Mr. Abhay, I get a sense from what you said or your comments that IL-23 probably has some definite advantages over IL-17. Because you alluded to an increasing market share of IL-23. So if you can just illuminate as to what is that would be very helpful. Or if my observation is wrong, please let me know.
Repeat your question, please.
You just mentioned in one of the questions that IL-23 will gain its market share. So I'm getting a sense that there is some definite advantage of IL-23 over IL-17 or over any other therapy. That is why you probably are commenting like that. So if that is the case, can you just let me know what is the exact benefit you are looking at in IL-23?
So when I speak to the KOLs, what I understand from them, where they see a clinical difference is, I think, the quality of the response, and with the side effects being much lower than what they see with the other class of drugs. This is the sense that they have. So different ways they phrase it, maybe also a factor of the advertising messages of company. They talk about smoother response, they talk about a gradual response, they talk about patients are comfortable with the therapy. So I think all surrender, what they are saying is they are happy with the quality of response they get from the IL-23s as compared to the IL-17s. 17 rather.
I see. Okay. And so this response is not just specific to Ilumya, but actually in general for the IL-23. Right?
Which is what I said. It's a class effect, but remember there's only one product promoting it. When we also start promoting the product in the indication, it will help us and it will help the class even more.
Understood. Okay. Perfect. Thank you very much.
Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I now hand the conference over to Mr. Nimish Desai for his closing comments. Over to you, sir.
Thank you, everybody, for joining us on this call. If any of your questions have remained unanswered, do send them across and we'll try to get them answered. Thank you and have a good day.